Everyone seems to be in agreement that the second quarter would not be as promising as the first, which might cause Tesla's stock price to decline. Recently, the tech-savvy NASDAQ composite plummeted almost 4%, while Tesla's shares fell more than 12%. Among the mega-cap tech companies that saw a decline of more than 3% were Apple, Amazon, Google, and Facebook parent Meta. Two producers of electric vehicles, Lucid and Rivian, also saw declines of 8.5% and 9.5% respectively. What does the second quarter hold for Tesla and its investors? Now let's get started. Demand continues to outpace supply, and Tesla generated many beats in an absolutely remarkable quarter. It has demonstrated its dominance in the market and manufacturing efficiency. Compared to Wall Street's $18 billion projection, revenue was $18, 8 cents billion dollars, 8 cents billion dollars, up 80.5% year over year. Additionally, it produced adjusted earnings per share of $3.22, much exceeding $2.26 consensus estimates. Given the company's relative superiority over its vehicle competitors, the market is still optimistic about Tesla's future success, despite some people being cautious about it. Therefore, even after removing regulatory credits, we think Tesla's first quarter performance has already been taken into account. Tesla's results surpassed expectations by a stunning margin. In addition, the company's remarkable manufacturing efficiencies and pricing leadership were demonstrated by its ability to lower sales costs while raising prices. Tesla's CEO Elon Musk has said that while the company is having problems with supply, he is not currently concerned about demand. That ought to help assuage some investors' concerns about a more competitive landscape. Additionally, we think the business is in a strong position to prosper in the rapidly growing electric vehicle market, which will grow even in the face of rising inflation. However, we think that the Q2 production recovery programs could catch investors' interest. Nonetheless, Musk is upbeat about Shanghai's resumption. Additionally, he upheld Tesla's 50% production growth rate and even ventured that 60% growth might be attained by the end of 2022. Automobile manufacturers, including as Tesla, are facing increasing costs for battery raw materials and a shortage of semiconductor chips that is made worse by Shanghai's import restrictions. Despite an 87% year-over-year rise in automotive revenue to $16, 86 cents billion in the first quarter of 2022, COVID shutdowns in Shanghai prevented Tesla from building as much as 1 month's worth of product. In its April 20th results report, the business stated Tesla's revenue in China for the first quarter of 2022 was $4.65 billion. China currently accounts for 28% of Tesla's revenue. Additionally, Tesla has started exporting cars from China to markets in Europe and Asia. The business has built 2 new manufacturing facilities, one in Brandenburg, Germany, and the other in Austin, Texas. CFO Zach Kirschman said, on the company's earnings call, we deliver most cars very slowly. The prices of those delivered in the first quarter were less than what was being ordered at the time and were established in earlier quarters. He went on to say, production is resuming at a restricted level, and we're aiming to get back to full production as soon as possible. Additionally, Tesla has no immediate plans to raise prices. During the same call, Musk said that the current costs are for a car that will be delivered in the future, roughly 6 to 12 months from now. Analysts were especially worried about how Tesla's financial performance would be impacted by the current problems with the supply chain and the growing cost of raw materials. However, investors were reassured by Tesla's adjusted good EPS performance of the company's extraordinary ability to generate profits in a challenging macro environment. The $679 regulatory credits that the corporation disclosed were significantly more than the $312 million average expectation. Tesla nevertheless produced an adjusted EPS of $2.90, which is far more than the $2.26 street estimate, even after the credits were subtracted. Automobile gross margins surpassed 30% for the first time. In addition, Tesla announced that it had started a series of price hikes in preparation for future cost rises. Its PL may not have accurately represented these issues, but we still believe it will be challenging to break through the 30 barrier in Q2. As it gets ready to present its quarter report, China's top supplier of LFP batteries, CATL, is reportedly facing significant problems with raw material costs. It was anticipated that these issues would have a major effect on the company's first quarter profits. In addition, when its clients' contracts are due for renewal, CATL has suggested increasing prices. According to Chinese sources, CATL will therefore probably start raising its prices dramatically in Q2. One thing is certain. According to Shanghai Securities News, mainstream battery manufacturers like Catzel are under pressure as a result of the rising costs of upstream battery raw materials. In the future, makers of electric cars will absorb the increase in raw material costs, subjecting consumers to yet another round of price increases for new energy vehicles. In the upcoming second quarter, Cattle will be raising its prices for customers. Nonetheless, Tesla and Cattle are still in discussions, and the subject of whether to raise prices by 10 or 15 is still being discussed. As seen by Apple and Microsoft, the market's perception of high-tech stocks has shifted. However, supply chain problems and ongoing COVID-related shutdowns in China are a cause for concern. Tesla also made hints about contract renewals during its results announcement. The company's CFO, Zachary Kirkhorn, stressed that although raw materials make up 10 to 15 of their overall cost structure, they have no direct or immediate effect on the business. Kirkhorn claims that Tesla occasionally has agreements with vendors, but when those agreements finish, they have to be renegotiated to account for a delay. In certain circumstances, our contracts do immediately reflect changes in commodity or raw material prices, he stated, but Tesla's payment for that comes with a delay because of the contract. Thinks production will be much greater in Q3 and Q4. Seems that they may be able to produce more than 1.5 million cars this year as a result. From the time a factory starts up and produces a small number of units until the time it is finished and producing high quality cars in large quantities, it takes roughly 9 to 12 months. But from the beginning of production, it might take them more than a year to achieve the 5,000 per week level. And there's the whole Twitter thing. Tesla stock experienced a minor decline following Elon's acquisition of Twitter. The decline occurred just one day after Musk's $44 billion takeover of the company was approved by Twitter's board of directors, suggesting that investor fears over the deal may have contributed to some of the decline. A total of $25, 5 cents billion dollars, 5 cents billion dollars, 5 cents billion dollars secured by Tesla stock is owed by Musk. The transaction includes $21 billion equity. Musk is the richest man in the world, but a large portion of his wealth is tied to Tesla stock. So he would need to take out a loan against his assets to cover the cost of the transaction. The many diversions that come with owning a site like Twitter might also worry Tesla investors. Musk may be under time pressure because it appears like he wants a large say in how the business is run. Musk will lead Twitter and Tesla, as well as SpaceX should the transaction proceed. In addition, he owns two smaller companies, Neuralink and The Boring Company. We also think Musk's optimism is noteworthy. About 50,000 manufacturing units are estimated to have been lost by Tesla as a result of the Giga Shanghai closure. Conversely, the company is committed to simplifying the construction, and a new Giga Texas production procedure has resulted in a simpler Model I structure. Tesla has significantly lowered the structure of the Model I and eliminated over 1,600 welds as compared to the current Model 3 manufacturing. Tesla further explained the enhancements during the results call. They also underlined that they should be able to ramp up production in Texas and Berlin more quickly than in Shanghai because they have learned a lot. Is a fantastic 2022, still conceivable for Tesla. For one thing, Tesla thinks so. The optimism of management is demonstrated by a number of factors, including the key lessons it shared during the earnings call regarding Shanghai's recovery. Additionally, it thinks that significant advancements in its state-of-the-art manufacturing process will be essential. We think Tesla has demonstrated to its tech and auto industry peers how to function in an extremely challenging macro environment. But instead of offering justifications, the Tesla team has prospered in a variety of circumstances, despite how challenging they may seem. All of the things we've covered in this video, though, could work together to negatively impact Tesla's stock price and change market sentiment. Do you anticipate a fantastic second quarter for Tesla? Please leave a comment below.